Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, the market is pulled back, right? And I keep saying we're going to get a relief rally. Now, we'll see. Maybe this is the start of the bear market. Maybe we're going to go down 20% and just go into the bear market. Now, the HYG, if you notice, which is the junk bonds, that's starting to come down. And if that comes down hard, this could be the beginning of the bear market. Now, my personal opinion is that we will get one more push back up and give you another exit point if you haven't already exited the market. But we'll see how that plays out. Right now, it's eating up a lot of people's money, right? A lot of people were trading on margin, and that money's vanished. It's gone away. Where does all the money go? Trillions of dollars have been wiped out. Goes to money heaven, some of it, but some of it flows into that gold market. Look at the gold market. Record high, record high, record high. Gold is staying strong even though the market is collapsing, right? Now everybody tells me that. They say, but Mike, gold's going to go down with the market. I'm not sure it is this time. You see, the problem is that it's a dollar problem. Your dollar's not worth anything, so people want that gold. That gold keeps going higher and higher and higher. And that's where a lot of the money's going. They're pulling it out of the stock market, putting it into gold. Now, are they putting it into Bitcoin? I don't think so. That's at 109,000 down at 80,000. Maybe it gets down to 60,000 before we get a bounce there. I'm not sure. Actually, I do think they're going to get one more bounce in Bitcoin. I think it'll bounce back above 100,000. This is just my take. Leave your take in the comments below. Do you think we're going into a bear market instead of getting a bounce, go straight in to the bear market? It's a possibility, I suppose. All right, let's talk a little bit about what's going on in the real estate market. Everybody loves when I talk about the real estate market. I don't know why. I am a broker, full disclosure. Okay, we've had this big merger. It's not really a merger. Rocket Mortgage is buying out Redfin. Okay, that's interesting, right? Okay, so when I was I used to have a partner that was a mortgage broker. I wasn't really a partner. What he would do is I would give him all of my business, right? I'd go out and I'd sell the house and I'd say, hey, you need to get a loan. You need to get a mortgage. Go to Derek, right? And they'd go to Derek and they'd give him the loan. He'd get him set him up, right? And then he'd kind of give me some of the money back. Now, there's a thing called RESPA, Real Estate Settlement Procedures Act. In other words, he is not allowed to give me any money back. Not allowed. It's illegal, right? But yet we can allow a merger of the largest mortgage holder with one of the largest real estate brokerage firms, and now they're going to merge together. But there's not going to be any collusion when the Redfin people start saying, hey, you got to go to Rocket Mortgage if you want to work with us. And the Rocket Mortgage people saying, hey, you need a real estate agent, you go to Redfin. So there's going to be some synergies there, but I'm not allowed to do that as a private broker. But if you got $1.75 billion, what Rocket Mortgage paid for Redfin, then you're allowed to get that synergy, get those kickbacks going. I don't know exactly how this is going to play out. It's going to be fascinating, right? Redfin has about 5,000 employees. We'll see if they hold on. Now, Redfin stock, very interesting. On the news, it went from $6 to $10. Okay, well, Rocket Companies, which holds Rocket Mortgage, that went from $16 down to $13. What this tells me is that Rocket Mortgage probably overpaid for Redfin. Now, you see, here's the problem with Redfin. You see, Redfin, they go out and they sell houses. They charge 1% listing fee. Well, at least that's what their advertising used to do. I think maybe they're up to 1.5% now, but you can go list your home with them. And you can get someone that, well, they're not on really a commission. I think they're on a salary there. They will go and they'll show the home for you and they'll do the paperwork for you. But here's the thing. Now, Redfin in 2023, they did 559,000 transactions. 559,000 real estate transactions in 2023. Now that's a lot, right? How much money do you think they made? Man, if I did 559,000 transactions, let's see, I make about 50,000 a transaction. I don't know how much it'd be, but it'd probably be in billions of dollars. Well, Redfin, they managed to lose $126 million that year. Doing 559,000 transactions, they came up up and they lost 126 million. That was 2023. Did 2024 get better? Yeah, it got better to the downside. They lost $164 million. $164 million. And I sit there and scratch my head. I go, wow, could I figure out how to lose $160 million? Could I figure out how to do that? Because if I could, it would be worth $1.75 billion. Because that's what Rocket Mortgage paid for Redfin. Now, Rocket Mortgage, they're owned by a billionaire, Dan Gilbert. He's a multi-billionaire. He's going to be fine. Don't worry about him. Gave away a couple billion to get Redfin, but he's still got 25 billion left over. And you know, Glenn Kelman, the one who founded Redfin, he's going to be all right too. He got a big bonus to put the deal together, right? And he's going to stay on so he won't be bored. He'll have something to do. Maybe he can figure a way to lose $200 million in 2025. I think that's a possibility. But the real estate market, well, it's on its deathbed. It's in a lot of trouble. It's on life support right now. You see, the FHA market, which is, well, those are the loans backed by the federal government, right? So me and you, we're kind of responsible for those loans. And those are loans where people come in and they buy, let's say, a $500,000 house. They put 3% down, right? 15,000, what is, I don't even know what that is. 3,000 times 5 looks like 15,000, right? They put 15,000 down to buy the $500,000 house. Now, is that a lot of skin in the game? That doesn't even pay your closing costs, right? But here's the thing. You see these FHA loans, there's 8 million of these loans outstanding, right? 8 million of them. But over 1 million of them are already delinquent. They're delinquent. Over 1 million loans are delinquent. Now, this is interesting to me because you only have 900,000 listings in the whole United States. There's 900,000 homes for sale, but you got over 1 million people that are already behind. Now, in the old days, what we would do is we'd foreclose on them. But then you had the Biden administration. They said, don't worry about it. We got taxpayer money. We'll come in and we'll pay the mortgage for you. You just stay put and we'll pay the mortgage because we got taxpayer money. They would not allow foreclosures during the Biden administration. I really hope the Trump administration's different, right? You're saying, but Mike, you're evil. You're going to go kick people out of their house. Yes, I am. If they don't pay their mortgage, they should not be a homeowner, right? Maybe they should move in with friends. Maybe they should become a renter. Maybe they should live in their car. I have a lot of friends right now living in their car. They actually say it's not that bad. Personally, I wouldn't want to do it, but a lot of people do that, right? So if you can't pay your mortgage, you got to leave your house. You can't have the taxpayers paying for your mortgage. You want to pay your next door neighbor's mortgage on top of your mortgage? If you do, just go knock on their door. I'm sure they'd probably let you kick in on their mortgage, but I'm tired of that stuff. Look, if there's foreclosures are operating properly, this real estate market comes back to normal. What's normal? You'd have to revert back to the mean. You'd have to drop about 40 to 50% to revert back to the long-term moving average. And I think that's the direction we're going to be headed in. But not yet. These foreclosures haven't hit the market yet. Now, here's what's interesting. See, a lot of people saying, you know, Mike, you got this all wrong. All right, because I tell people they should wait. They should be patient. You know, if you want to go buy a house, please do it. Us real estate brokers need the business. We call you the bag holder, right? You're the bag holder. You're the one going to be left holding the bag because here's what's happened. If you bought a home in the last 3 years and you bought it on an FHA loan, well, about 18% of those are already in default. So picture this. 5 people buy a home. For every 5 people that bought a home, one of them is already in default. Do you want to be that one? No, wait till you can afford to buy a home. Wait till you can afford to put a nice down payment. Wait till your prices come down to where you're not going to take the beating. There's going to be a beating. Will you be happy you go buy $1 million house today and a year from now that's $500,000? Are you going to be happy with it? People get upset when I talk about this. Look, I'm not trying to be negative on the housing market. I love real estate. It's just the worst time in history to buy. It's the most unaffordable, right? I mean, if you want to buy, please go right ahead. But I think they're going to drop. I think they're going to drop by about 40% because I think that this is coming to an end. I think where you put the foreclosures onto the marketplace, you just doubled the inventory nationwide, right? You just doubled the inventory. You see what they're getting rid of? The Trump organization's getting rid of the Consumer Finance Protection Collection Bureau. Now, that's the one that keeps them from being foreclosed upon, and that's a problem. That's a big problem, right? You got to be able to foreclose on houses so you get the regular flow in the housing market. You should get the government, just get them out of the mortgage business, right? The FHA, they're all backed by the government. That's me and you, and we're paying 25% of those people, we're paying their mortgage. I'm tired of that. Personally, it's called Fannie Mae and Freddie Mac. They're all backed by them, right? And we're guaranteed by them. Now, Trump wants to take those private. I don't know how you take them private because that's the government that's guaranteeing the loans, but maybe you can take those private. We'll see how that plays out. But if you get the government out of the mortgage business, they own $3 trillion worth of mortgages. Where would the mortgage rates be if they didn't buy those $3 trillion? Probably up over 10%. Do I think we're going up over 10%? I do. What do I think it's going to do to your property value? I think it's going to drop it like a rock. That's just my opinion. You got the Moon Boys out there, Barbara Cochran. You got Dave Ramsey, Moon Boy, Moon Girl right there saying it's the best time to buy right now. I'm a real estate agent. I'm supposed to say, get out there and buy. It's always a great time to buy when you're a real estate agent, right? No, it's a terrible time to buy. And if you want to go out there and buy, you can. But I want to get back a little bit to the Rocket Mortgage, right? Mortgage business is more shady than the real estate business. It really is. Now, my buddy, he was in the mortgage business anyways, and I'd get all my loans from him because why? Because he paid me to do it. Every loan I brought him, he'd throw me $500, $1,000, whatever, right? He'd throw me some money for it, and that was completely, totally illegal, so I don't even know what I'm talking about, but apparently you can do it now with Rocket Mortgage and Redfin joining. But anyways, he was the guy that took care of all my loans, and you know what? He never, ever had a loan turned down. Now, he had to change some numbers. Like one of my guys, he only made $60,000 a year. Mike, that's not enough for those loans. Don't you think he got a raise to 120? And he'd write in 120. And this is interesting. He lost everything in the great financial crisis. See, there was a guy named Angelo Musillo. Angelo Musillo. He was, what was his company? His company was Countrywide. They were the largest lender out there, right? And my buddy, he was wholesaling money with them back and forth. He was a high roller, right? He had these offices. Oh my goodness, it looked like a top high-end lawyer office when you walked into his offices. Very impressive. But anyways, he lost everything, lost his office, lost all the homes he owed, and lost it all. Why? Because the market came down. Now, I think it's going to come down again. Do I think it's going to come down like 2008? I kind of do. Well, actually, I think it's an extension of 2008. 2008 never got to play out. You see, we just printed money. We printed over the problem, right? We printed over the problem, and we inflated the bubble bigger. If we had let the bubble crash, maybe we would be rebuilding now. But no, we got the biggest bubble in the world. Another one of my favorite ones with my loan partner, right? I had this gentleman, he was 85 years old, right? And he wanted to buy a house for his family to live in. His son couldn't get a loan because his son didn't have a job, but he needed to get the house, right? So anyways, I go, oh, don't worry, I got a guy who'll give you a 30-year loan. So Derek gave the guy a 30-year loan, 85-year-old man. That was crazy, right? He did not live to be 115. He died. The house went into foreclosure. The bank took it back. They didn't call me to sell that one because they were angry with me. Sometimes a bank gets angry with you when you give an 85-year-old man a 30-year loan. Hey, I bet our government would give him a 50-year loan. That's just my take, though. You see, the shady end of the business is not really the real estate end. The shady end is the mortgage business. Now, you got to get licensed now. Yeah, licenses are a lot tougher to get. Even if you're just a loan originator, you got to go get that license. But it's a business where they're still making a lot of profit in that business. But we'll see how it all plays out. That's just a fascinating story. But anyways, you got two parts to the real estate industry. You got the mortgages and you got the real estate brokerage side, right? And right now, the two biggest ones are merging together. Do I think that's good for you? I don't have an opinion on that. I don't think it's going to hurt you. But I do think when you go to Redfin, they're going to be steering you in the direction of Rocket. When you go to Rocket, they're going to steer you in the direction of Redfin. We'll just see how that all plays out. Either way, I think the whole real estate market is going to come crashing down. I think the dam's about ready to bust open on these foreclosures, putting the inventory onto the marketplace, which is going to double the inventory, which is going to lower the price. We'll see how it all plays out. Anyways, give me a thumbs up up, punch the subscribe button. We made it to the weekend. Everybody get out there. Have a great weekend. We'll talk again next week. Bye-bye now.